This analysis clearly indicates that the downward spiral is already on. Hello everybody, welcome to today's video. In this video, we are going to analyze this specific table, the percentage of shares that are pledged by the Adani Group of companies. Now, before we continue with the analysis, a quick disclaimer, please understand all the conclusions that I am drawing from this analysis are fact-driven and pretty logical. If you do agree with my analysis, please go ahead, share it with your network as well. Because I believe this video might not stand the test of its time and it might be removed very soon. So let's continue with the analysis. The first thing before we jump into and analyze this table, let's understand the column headers. What does percentage promoter shares pledged means? Let's take a simple example. If you are a student and if you are looking for a student loan of 40 lakhs, the bank will say, hey Pavan, why don't you bring your house documents and I will keep it as collateral or security deposit. Because in case you don't pay me that loan amount, I will go ahead seize the house or I'll sell the house, right? The exact same things happen in the corporate world as well. If a corporate wants to take a particular loan, they will go ahead potentially and give that security deposit, and that security deposit could be the shares themselves. And Adani has basically given 25% of their shares as the security deposit. Now, if we just understand what happens in case the market go down, right? For example, there is a housing bubble, the entire value of the house comes down, the bank will say, hey Pavan, why don't you clear the loan? Or if you have another loan, why don't you give me the papers of that other house as well? So that the security deposit is intact, right? And that's a very similar thing that can happen with Adani as well, right? Either you clear off the loans or why don't you give or pledge more shares? Now, if you look at what's the overall loan numbers to start with, Adani Power, the overall market cap was 1,06,000 crores on Jan 22nd, 2023. And out of that, 75% are owned by Adani Group itself, 74.97%, which means roughly, let's say 80,000 crores are owned by the Adani Group. And they have pledged 25% shares, which means the security deposit is 25% of that 80,000 crores, which is around 20,000 crores. If the security deposit is 20,000 crores, what could be the loan amount? It could be 15,000 crores, 16,000 crores, or 18,000 crores, whatever that number is, right? And if you add up the same numbers for Adani Ports, we are looking at a loan amount of roughly 25,000 to 30,000 crores. Because the share prices of Adani Ports has dropped by 25% in the last 5 days, and for Adani Power it has dropped by 15%, the overall security amount has come down drastically for the banks or the lender, whoever it is. So they will say, hey Adani, can you please go ahead and pay that loan, 25,000 to 30,000 crores, or pay at least a partial amount of that loan. Now, what are the options through which they can pay this loan amount? Number one is from their operations. If they are earning a lot of profit, they can pay loan from that profit. But unfortunately, none of the businesses that Adani is running do not generate that kind of cash right now. For example, if we look at Adani Power, the total positive incoming cash is 669 crores only. And the loan amount we are talking about is 25 to 30,000 crores. So no way clear. Even if you add up all the profits, all the cash flows coming into Adani for all the group companies, it is still nowhere close. So paying off loans is very tricky and probably not possible. The second option is going ahead and adding more shares into the bucket. Probably Adani can do that. The third option is Adani can say, hey, I don't care about the loan. I'm not going to pay you. You go ahead and sell these shares in the share market. Well, Adani might not do that because if these banks go ahead and sell these shares in the share market, the supply of the shares will increase. And as the supply increases, the demand for the shares will go down and also the price will come down. And this might also induce panic selling. So that's potentially an option that's out of question. So the third option is pledging more shares. These guys can go ahead and pledge more shares, let's say from Adani Power and Adani Ports. Now, if they want to get another loan going forward, they need a lot of loans going forward because they are not a technology business where they build a particular piece of software and keep selling it. They are more into infrastructure heavy businesses where it's really capital intensive. So they continue to borrow that money. And once these shares of Adani Ports and Adani Power are pledged, if you look at the other companies, the price to earnings ratio, which indicates how expensive the stock right now is, all of them are pretty expensive. Adani Green, Adani Total Gas, Transmission Enterprises, Wilmar. Since all the other stocks are already expensive, they might go through a lot of volatility in the short term and also in the medium term. The banks, which would then lend money against these other particular companies, it might become difficult for them because they will say, hey, there's a lot of volatility. Rather, we will go ahead and give you the same loan but at a higher interest rate. When the interest rate is higher, majority of the money that they are borrowing, it's also going back as interest being paid. So the return on capital that is invested on a particular project is coming down, because out of the 100 rupees, if 98 rupees was invested in the business to buying an equipment, right now only 96-95 can be invested in the business because there is additional interest that has to be paid now. This, what happens is that as the return of capital comes down, the trust in the stock will go down among the shareholders. So they will start dumping out the stock, and the return on capital will keep further decreasing because now the loans become even more expensive. Since this is a capital intensive business, it means that they need to continue borrowing even if the interest rates are high. So the growth rates that are projected for Adani might not happen and the stocks might come down. Now this potentially is a scenario for Adani. They might say that, hey, we'll issue more shares and we will basically pay off those loans without borrowing from anybody. Well, they would have tried that, but Adani Enterprises, which has launched their FPO, follow-on public offering to issue more shares into the market, that was subscribed only by 1%. Which means currently people are not interested in investing in the company, and for them to borrow to continue growing their business, it's going to be more expensive. So I believe the death spiral has already started. It's just a matter of time how fastly this will unravel. Well, that's not just the case with Adani, by the way. Most of the businesses have this loop where after a certain point they fall off the loop. For technology companies like Facebook, it could be 20 years. For Snapchat, it could be 10 years. For other companies, it could be a little longer. But end of the day, there is always this loop that everybody will fall into. That's the nature of the corporate world. Now, the question is, what happens with the other companies in the Indian stock market? According to the National Stock Exchange, a quarter of the companies have their promoters' shares being pledged. And the percentage of the shares being pledged are 44%. Now, what happens when the trust in one company goes down and they see the risk of the shares being pledged? The other group of companies, the quarter set of companies where the shares are pledged, they see the risk in these companies as well, and their stock prices also will come down. A similar situation has happened 3 years back when Zee and Dish TV were in this situation, and the impact was directly on Adani Ports and Adani Power. Now, the situation is reversed. Adani Ports and Adani Power are leading this entire market drop down. Subsequently, other big players will also come down. So this is not just confined to Adani by any means. The negative sentiment is going to hurt the other players in the market as well. Please do let me know if this is some analysis that you agree with or not, and I would love to hear what you are thinking. Thank you so much guys for listening through me, and do let me know if there are any questions. Take care. Bye-bye.